what impact you expect from the Alight partnership and how it's going to aid the revenues going forward?
So as you know, we have taken only 1 month revenue of Alight in Q2. So there will be certainly a momentum which will get created because 2 months. But more than that, I think it's a landmark deal. It's a largest deal that we ever signed as an organization, and it's truly what we call as a front office digital experience deal for our customer and our customers' customers. So I would go far beyond the financials of just that deal. I think it's just a deal which makes us look very different from sheer capability and what we can do for our customer standpoint, and therefore we are all very encouraged by the deal and the success behind it.
But any timeline on what kind of impact we'll see from which quarter, the real impact of this deal also?
It will start flowing in from Q3 completely, and because it comes with I mean it's a service which we provide 100% from day one to our customers. So it will be fully, you will see the full impact of it from Q3, and there is no prolonged ramp-up period around this.
Right. And looking at the Q2 margin, what's the impact of rupee depreciation and the wage hikes, and what's really behind?
So I think we are very encouraged by our performance. So on the face of it, the number looks at a 14.6%. But if I normalize for the one-time impact we took on our customer settlement, that number is 18.1%. And there, the overall two elements have played out. We have expanded our operational margin by operating levers by about 1.8%, despite taking 2 months salary impact. And we have been helped by currency by about 70 basis points, all of which has flown through the margin. So overall, I think it's been a very good quarter. As a CFO, I feel very happy that we expanded margin from a normalized basis in Q1 to Q2 by a 2.5% kind of number.
If you look at the digital transformation, you're getting the numbers here, but what about the deal sizes? How are they growing quarter on quarter?
So deal sizes are certainly expanding, but they are certainly not. They are certainly very important aspect of a large deal, but they are not themselves all consuming a large deal of $100 million. But like any new offering or services, they are slowly becoming, maybe 2 years back, from a few $100,000 to a few $1 million now. And I'm sure it will run into a lot more $1 million in next 2 years. So that's natural evolution of a new offering that we see.
Right, but when you look at your peers, they're able to crack not just numbers but the deal sizes also. So how would you differentiate your performance as per your peers?
I think performance-wise, we had a stellar quarter. We grew 13% sequential in digital. Now it comprises of 31.4% of our revenues. So I am very happy with what we have been able to achieve. Digital, as I said, is very critical and an important component of a large deal now. It has host of services, some of which could be traditional, some of which could be digital, but you will win a large deal because of your digital offering. So overall, you can characterize a deal only by the digital substance of it or an overall substance of it. But I think we know the kind of deals are there in the market, and we feel very comfortable that we will be able to go after them and win them just the way we have done for Alight. And that's my answer.
And what about the challenges for next quarter? This quarter you also missed estimate because of your one-time client loss. Is that loss behind us, or it's going to have its own repercussion the following quarter as well? And what about the other factors that could play? So
as I said, one-time customer settlement is really one-time customer settlement. So we don't see any follow-through impact of that in the Q3. So long as Q3 is concerned, it's a traditional furlough quarter where there will be a time of year, a time of quarter where we will not have revenues. And that would play out on our revenues and or therefore our profitability, because cost base remains same. It's just a revenue shrinkage for few days that we have to accommodate, and therefore I feel we will have to watch out for those, but we still feel comfortable that we would be able to keep our margins in a narrow range from what we have delivered for quarter 2.
And what about the healthcare and life sciences business? What's really happening there? Is it the company specific issues are you facing, or it's more of an industry problem?
Well, for us, it's an investment in a very I would say top-notch platform that we have done. Unfortunately, it's been impacted by the uncertainty that surrounds the Affordable Care Act. We want to wait and watch the current quarter where the open enrollment takes place in the current quarter, which is quarter 3, and that would determine what would be our revenue stream for next year from this business. And so therefore I would say there is an element of what happens this quarter kind of question that we'll have to see through in quarter 3.
Right, and if you look at your cloud and infrastructure services business as well, that's if you look at the last 4 quarters and 1 quarter of this year, it's been down. What's the reason for that, and what's happening there?
No, actually this quarter, if you see constant currency growth, all our service lines have done very well, particularly data analytics and artificial intelligence, or BPS. In some form, all the service lines have grown. Of course, some have grown a little smaller clip than the others, but overall, I'm quite happy with the progress that we are making.
Right, and to some extent, all the sectors have performed fairly well this quarter. Does that mean the worst is behind us, and you will start to, take the next journey forward? There's no going back and forth again.
So I will only say that our numbers will speak for ourselves. At this point, we can only say God willing, of course, but we are putting our might behind the execution, and I think let our numbers speak for themselves as we progress, rather than we commenting if something is behind or something is ahead.
Right, and lastly, I want to understand about the active customer base. This also been down as compared to the last 4 quarters and 1 quarter. What's happening there? What kind of?
I wouldn't worry too much about active customer base, because active customer base is subject to 2 things. One, our ability to add new customers, but also our ability to take strategic calls on our tail accounts, where we are servicing the customer in a very, very tiny fraction of its portfolio. It's much better for us to really focus our energy on some of our potentially large customer and put our might behind that to expand those services. So we constantly watch out for the places, geographies, type of customers that we are serving, and how do we maximize Wipro's value to the customers that are most important for us. And therefore, over a period of time, you will see that client mining is a big theme for us, and therefore we'll continue to add more and more of our muscle into fewer customers, where we can be truly partners to our customers. There is also another factor that we define active customers when they provide us with certain dollar number of annual revenue. And when the currencies move so much, it always is some customer go above or go down, not because our work is changing, but it's just because that revenue threshold, they are falling above or below because the currencies have moved significantly. That also plays up little bit on that number.
And before I let you go, just want to understand one more bit as well. When do you expect to match the performance of your peer? You have an internal target in mind as well for that, because we've been talking about you had not too good year so far, and you have an internal target in mind where you can at least be at par at the industry growth.
Yeah, so it is the way we look at it is that the quarters make the year and months make the quarters. So we look at every week, which makes a month, and every month, which makes a quarter, very, very carefully. And so long as we deliver on this week and next week, a month will be okay, and it will build up. So I am not worried. If you see, for example, our BFSI growth, they have done excellent for last 4 quarters. So therefore, they are 16% year on year. Now, it doesn't mean that we have applied a very different strategy for that business. I think we have just executed very well there. So long as I am able to get that execution right for other segments and do 3 or 4% sequential for 3-4 quarters, every segment potentially can grow at a much higher pace than what you have seen in past. So one doesn't get, one should not look what has been my annual growth, because that talks about previous 4 quarters. I think we are much more concerned about quarter 3 and quarter 4 and quarter 1 of next year.